I think we were certainly all not so much blindsided because certainly the warning was there on Friday, during the US markets, but I still think the markets were probably trading with a little bit of perhaps hope rather than fear that, maybe before the weekend was out, we might see some punches pulled there, but evidently that's not the case. And now we're all confronting a situation where, the first week of the Trump administration, the mood music and the narrative was, well, maybe things aren't going to be quite as bad as the pre-election rhetoric, and maybe Trump's bite is not going to be quite as bad as his pre-election bite. And that thesis has been completely unended, I would say, by the weekend. And we know that there's plenty more to come, particularly with respect to the EU. This is only the first salvo as concerns China is concerned. So, we're still wrapped with uncertainty. But what we do know is that, when Trump says he's going to do something, we should take him at his word. And I think that's why markets are reacting the way that they are this morning.
All right, if we can just keep up this chart on our screen here, because we've got those that are the targets of these tariffs, the Canadian, the Mexican, the Chinese offshore currency, given that we've got the Chinese markets closed right now, we're not seeing the onshore trade. Do you believe what we're seeing here as far as the material impact on these currencies are warranted? Is it more than you expected or anticipated, Ray?
Oh, no, and I don't think we're done at all, basically, with a broad-based US dollar move. Interesting that the Aussie dollar has actually suffered more than the Canadian dollar. That might just really reflect, trading activity and liquidity in this part of the world. But, when it comes to the Aussie, we've been warning for really since Trump's election that, the downside risks for the Aussie south of 60 are very material in the event that, we do start to see pre-election tariff rhetoric translated into reality. Obviously, one of the next shoes to drop will obviously be how China responds, particularly with the currency when the onshore market reopens. I think that you look at a lot of these currencies, and particularly Aussie, so they're actually consistent with the dollar against the renminbi rising to 740, 750. So that's sort of a response we think would cause a further sharp sell-off. But if in the weeks and months ahead we're going to see the Chinese currency moving up, say towards 8, then I think that implies material downside for a lot of the EM currencies, and Aussie in particular will bear the brunt of that, because it all plays to the view that global growth is going to be downgraded significantly. Those downgrades haven't come through yet, but believe me, they are coming. And that is then going to be the enemy for these sort of pro-cyclical or pro-growth currencies. And, an Aussie stands sort of proud as one of the currencies that will be both the beneficiary and a victim of any flip from sort of positive to very negative global growth outlooks.